What's up everybody, I am Jasprit Singh, and the unluckiest generation of all time just got a little bit unluckier. The Federal Reserve Bank is going to start raising interest rates now, and that is going to hurt millennials the most because of plastic. Plastic? No, plastic. A firm just put out a new study where they said that for 4 out of 10 millennials, the number one biggest financial setback is not student loans, it's not buying a car, it's not paying for your rent, it's your credit card debt. The reason why this is so important to understand right now is because your credit card debt isn't fixed. It's at a variable interest rate mortgage. So as interest rates go up, your credit card debt becomes more expensive because the interest rates you have to pay on your credit card balance is now going to go up, which means your minimum payments get more expensive and your credit card debt becomes more expensive every single month. So Affirm, the company that did the study, is one of the largest buy now, pay later companies out there. And in their study, let me just show you, they said that the average United States consumer worries about money 6 times a day. I have no idea if that's good news or bad news, but let's dive a little bit deeper into the study. The first line says that overspending is a top source of anxiety across all generations. I know, it's kind of ironic that Affirm of all companies is reporting that, but I'll get to that in just a second. The good news is it seems that younger people are getting smarter with their money because it revealed that almost half of Gen Z started saving or plan to start saving by the time they hit 25 compared to just 28% of millennials. And then this is where things get a little weird and kind of scary. It says that with 40% of millennials agreeing that credit card debt is their biggest financial setback, it's no surprise that they're seeing millennials embrace more modern, flexible payment options like Affirm. And then it says that nearly 3/4 of millennials plan to use a buy now, pay later solution in 2022 and would rather use that over a credit card. So let's talk about what this means. Let's assume that you're having a party and you want to make some guacamole. So you go out and you want to buy, these are some avocados. I know these are really bad drawings, but let's assume these are avocados and you want to buy $100 worth of avocados. You go to the store, you go to Walmart, you pick up $100 worth of avocados, which is pretty much their whole stock of avocados. You put it in your cart, you go to checkout, and now you have a few options. Well, the first thing that you can do is you can put this money on your credit card. Now let's assume that you don't have $100 to afford these avocados. You put this on your credit card, the credit card company is gonna give Walmart the $100, and now you got a credit card bill for $100. Now, if you don't have $100, you're gonna make the minimum payment of say $20 in this case, and then you're gonna carry the other balance of $80, and now you're gonna pay interest of somewhere between 15 and 25% on every avocado that you bought. That's pretty expensive. Option number 2 is, well, you pay for this in cash, or you can actually afford to buy the avocados. So in this case, let's say you put it on your credit card, you put it on your debit card, or you pay cash. I prefer credit cards, but I always pay off my balance every single month. That way I don't have to pay any interest, but whatever it is, you buy the avocados and then you pay it off. So this is gonna cost you $100 today, but 0% interest because, well, you paid it all off, so you don't have to pay any interest. But now in this new digital technology age, there's a new competitor emerging called buy now, pay later. So it's buy now, pay later. This is one of the fastest growing fintech sectors in the industry, and there's a lot of money flowing here. So the way buy now, pay later works is, hey, you can buy your avocados now, pay for it later. So you pay next to nothing now. Let's just say you got to pay the same amount as a credit card. You pay $20 now, and then the other $80 you're going to pay over time, and they're going to give you a schedule. Well, the interesting thing about that is, well, you don't have to pay all this $100 today, which means you get to keep more money in your pocket, which means maybe you go out and buy more avocados. Maybe you go out and buy more chips. Maybe you go out and buy more dip because you don't feel that pain of spending money because you can just buy whatever you want now and start paying for it later. You don't got to worry about it. But you have to wonder if these buy now, pay later companies are going to let you just pay off this $100 over the next 6 months. How are they going to make money? I mean, they have to be making money some ways. Well, the first thing that they do is they make money just like a credit card company does. When you swipe your credit card at Walmart, Walmart is going to pay Visa a little bit of money. So that's the first thing that happens with buy now, pay later. But the interesting thing is, just like with credit cards, if you start to carry a balance and you don't pay off your purchase in time, you're going to pay interest on your 0% APR buy now, pay later. So let's write this right here. They say it's 0% APR, 0%. But there has to be a catch, right? So I looked a little bit deeper into this. I did a little bit of digging on how a firm makes money, and if you look at it, the first paragraph is through interest income, and it says that the APRs can range from 0 to 30%, with the average on an Affirm loan of 18%. So what that's telling me is, sure, you don't got to pay any interest now, but once you can't pay it off, now you're going to be paying somewhere between 0 and 30% APR, with the average being 18%. Doesn't that kind of look a little similar to credit cards? The only difference is you don't got a piece of plastic here. You're doing it without plastic, but you're still carrying the same interest. You still got to pay all the fees, and now you might be going out and buying more stuff because you can buy whatever you want now and not have to worry about paying for it until later. Some of the other key data points from the study are that 3 out of 4 millennials say that they're most confident with their finances. A third of millennials say that not being taught how to budget their money is one of the biggest setbacks to their financial freedom, which really shouldn't be that surprising based off of this. More than 3/4 of millennials are very optimistic about where their finances will be in 10 years, even through this buy now, pay later system. More and more people are prioritizing financial stability, and when looking for a romantic partner, Americans agree that the ability to manage your finances is more important than physical appearance. So not only is the minority mindset going to help you build your bank account, it's also going to help you find a wife or a husband. Now, millennials have been through a lot financially. I mean, we've gone through 2 once-in-a-lifetime crashes in just the last couple of decades, and Gen Z is saying, well, what about us? We're getting screwed even more. But if we just focus on millennials right now, millennials have been labeled the unluckiest generation in history financially because of all the things going on, and this is where it now gets even more important for you to get financially smart. The study by Affirm talks about how so many millennials wish that they would have been taught about budgeting because it's holding them back from financial freedom. The company that's publishing this is Affirm, and Affirm is saying that credit card companies are evil because they're stopping millennials from becoming wealthy, and they're also saying that not knowing how to budget your money is stopping you from becoming financially free, and the solution is buy whatever you want now, pay for it later. Do you see a little bit of irony there where it doesn't make any sense? This is where you have to have that sort of financial education to understand what's important for you. You as a consumer, you have to know what's good and what's not good for your money. The way I like to put it, where's my marker, is you need to create a shield which is gonna stop all the stupidity from coming into your bank account. You have to have this shield. This shield right here is your financial education, which is how you understand what's good and what's not good for your wallet and for your money. We are in an economy right now where the cost of living is going up because of inflation. That means everything is becoming more expensive because the value of your dollars, the value of your earnings are becoming less and less valuable, and your savings don't stretch as far. While at the same time, our standard of living is going up. Nowadays, everybody wants to have the newest iPhone, the newest MacBook, the newest Tesla. Everybody wants to have the nicest thing. So not only is everything more expensive, people want to have nice stuff, while at the same time, wages have not been keeping up. So incomes are not growing as fast as the cost of living. It's not growing as fast as the cost of anything, but people want to keep buying the same stuff and more stuff, which means you're going to need more money in order to survive while your one job isn't covering it. That means either you're going to have to make more money in order to support your lifestyle, or you're going to have to go into debt to keep buying the things that you've been buying. The solution is first to stop doing what the majority of people are doing. Stop doing what everyone else is doing. You have to start developing this minority mindset, because if you keep playing the same game as everybody else, you're just playing a game of chicken to see who's going to get broke first. So what you got to do is you got to start thinking like the minority, and then you got to get financially educated, because it's more important now to know how to use your money the right way than ever before. The way you break out of the system and start building wealth for yourself is by doing 5 things. The first thing that you have to do is, if you have any sort of credit card debt, you got to cut the credit card. So I love spending with the credit card. I only try to spend with my credit card because my credit card pays me with cash back. I get perks, I get rewards. But if you have any sort of credit card debt, you got to stop using your credit card. The credit card debt that you're paying is now way more expensive than any of the rewards or perks that you could get. So if you carry any sort of credit card balance, the first thing you got to do is you got to stop using your credit card. Put your credit card away, and we got to pay down this debt as fast as possible, because your credit card debt is eating you alive. That 12 to 25% APR that you're paying on your credit card is so expensive, and that is what is going to keep your credit card companies rich, and it's going to keep you poor. I mean, if you could get the same returns as a credit card company, well, let's just look at the numbers. If you were just investing $100 a month, and that's all you did, and you could get a 20% annual return on your money, which is what a lot of credit card companies are getting, and some credit cards are getting even more. And now as interest rates go up, your credit card interest rate is going to go even higher, meaning your credit card debt is going to become even more expensive. But if you could just get a 20% return on your money and you do this for the next 30 years, well, your $100 monthly investment is going to grow to $2 million. And now you wonder why credit card companies are making such big profits, because this is what they're doing. They're investing their money. They know that people are going to carry these credit card debts and they're going to spend years, if not decades, paying them off. And if you do that, if you follow the system, you are giving them your future wealth, when what you could be doing is you pay this off and then you use this money to work to build your wealth instead of making somebody else rich. So the first thing you got to do is, if you have any sort of credit card debt, you need to pay that off as fast as possible. That way you can actually start building your financial wealth. It doesn't make sense for you to try to go out and invest your money in the stock market if you're paying 15% a year on your credit card debt. You should not be worried about investing your money if you have a pile of credit card debt right now, because if you're investing in the stock market, your goal is to get a 7 to 10% return a year on your money. But it doesn't make sense for you to get a 7 to 10% return a year on your money by investing your money while you're paying 15 to 20% a year on your credit card debt. So the first thing you got to do is you got to cut the credit card if you have any sort of credit card debt, and you need to control your spending, which brings us to the second thing you got to do. The second thing that you got to do is you got to stop ordering the extra guac, because now this is time for you to stack your cash. When you're young, you just graduated college a few years ago, this is your time to enjoy. This is the time to show off. This is the time for you to live your life. And so what happens to so many millennials is you start spending every dollar that you earn. In a lot of cases, you spend more than every dollar that you earn with the help of credit cards, but you're spending everything. You're living beyond paycheck to paycheck, or you're living paycheck to paycheck, because now you're spending every dollar that comes in. But the problem with that is, if you do that, you are never going to have the chance to become wealthy, versus the earlier you start investing, the more wealthy you will become. This is why it's so important for you, especially when you're young, to make some financial sacrifices, put some money aside, start stacking some cash. That way you can actually become wealthy and build a financial base for yourself, because one of the first things that you want to start doing is build some savings. Take some extra cash, so spend less money. Take some extra cash and just put it in a high interest savings account. This is not money that you're trying to use to build wealth with. This is money that you're just putting aside to protect you against a financial emergency. Maybe you get fired. Maybe your company goes under and you get laid off. Maybe you quit your job because you don't like it and you need some cash to sit back and rely on. This is why you need to have some cash put aside, because you never want to run into a situation where you get fired, your company goes under, and now you don't have any money to live off of, and now you got to go back into credit card debt. Protect yourself from whatever might happen in the future by putting aside some cash. The reason why I say get a high interest savings account is because a high interest savings account is going to pay you a lot more money on your savings and still be FDIC insured than a lot of traditional banks. I have both a traditional bank and a high interest savings account, so you can do the same thing. You can open up a traditional bank. I have a traditional bank right across my office, and they pay me 0.01% a year in interest on my savings. And then I have a couple other high interest savings accounts, and there's a bunch of them out there. You can go to Ally. They have one. CIT Bank has one. Find a good high interest savings account, open that up, and start saving some cash. Now you got to remember, this is not money that's going to make you wealthy. This is your savings cushion. You just want to start building this cushion. That way you have a financial base. The third thing that you want to do is you got to spend your money smartly. The solution to credit card debt and the solution to overspending on a credit card is not using a buy now, pay later system. It's the exact same thing. The way it works is you don't feel the pain of spending money today, so you go out and overspend. And now when you overspend, even if you never pay a penny in interest, you spent more money than you would have normally if you just bought things in full. You paid the full amount today, which means you have less money to invest, less money to save, less money for your future because you went out and spent more, or you spent so much money that now you're stuck with a useless TV and a very expensive couch that you're paying 24% interest on. Instead of doing all that, the first thing you got to do here is you need to start spending your money smartly, which means no more 0% APR, no more buy now, pay later, no more financing things on credit cards. If you're gonna buy anything, make sure you buy it in full, or if you buy it with a credit card, pay off your entire credit card balance in full every single month with no exceptions. If you cannot afford to buy the whole thing, don't buy it. The only exception to this will be your house. A simple rule of thumb that I always followed for things that are not necessary for me to survive is a rule of 5. If I can't buy 5 of them in full, I can't afford 1 of them. Start creating a system where you now stop buying things just to show off, stop buying things just because you think you can afford them. There's a difference between being able to afford something and being able to buy something. The majority of people live in a world where they think they can afford anything because you can go out and buy it. But just because you can buy it doesn't mean you can actually afford it. Affording it means that you don't got to worry about the price. Buying it means, well, you can qualify for some free money. You qualify for buy now, pay later. You qualify for it through credit card. You qualify to buy it through a loan. If you want to actually start building this wealth, stop playing the payments game. You're going to sleep a whole lot better when you don't have a whole stack of bills hitting your inbox every first of the month. And this also means having some financial insurance, something like life insurance to protect you against a financial tragedy, because if you are the breadwinner for your family and something were to happen to you tragically and you passed away, you want to make sure that your family is okay. You do not want to have your family plan a GoFundMe funeral where they have to crowdfund and raise money to start living their life again. So plan ahead. You want to be a strategic planner, a strategic financial person, and that means planning for things even when you're not there. Now, the thing that I want you to understand about something like life insurance is life insurance can work for you or it can work for your life insurance company. I want you to become wealthy, which means you are going to live off of your assets in the future. You're going to live off of your money, which means you just need a bridge between now and that wealth point. Which means you don't want to start just giving all of your money to your life insurance company, let them invest your money for you, and let them try to promise you some sort of financial freedom in the future. Use life insurance for you, don't use it for them. That means if you're going to use life insurance, get something like term life insurance, something that will give you that bridge until you become wealthy, until you can live off of your assets, because then if you're living off of your assets and you unexpectedly passed away, well, yeah, it's going to be hard for your family emotionally, but at least financially, they'll be okay because they have your assets to live off of. So you want to use life insurance the right way. And if you're looking for a way to get a free life insurance quote, you can check out our sponsor, Policygenius. They make it super simple and they only offer term life insurance policies. So if you want to check it out, I'll put a link to how you can get a free life insurance quote in the description below. The fourth thing that you want to do going down the list is you want to make sure every dollar that you earn now has a job. So one of the easiest ways to start investing your money is by using your company's 401k or by setting up an IRA. This is just a way for you to create an automatic investment that we have some retirement money. Now, if I'm being completely honest, I'm not a fan of the 401k or the IRA. I don't use a 401k, I don't use an IRA, I don't use any of these retirement accounts because I'm a real investor. I know that I can get better returns, I can have more control over my money, and I can have better tax breaks if I invest my money myself. Now, for the average person, that might not be something that you're interested in. For the average person, you might get a great benefit out of the 401k or the IRA, but what you have to understand is the 401k and the IRA is just the start. That it should not be your sole retirement plan. They should not be your sole investment plan. So if you are not a professional investor, if you are not very comfortable with investing your money yourself, then just start with the 401k, start with the IRA. Get started with that. But I also want you to learn how to invest your money yourself. Start learning about ETFs, start learning about investing your money in the stock market, start learning about real estate investing, start learning about how you can invest your money to build your wealth yourself, because it's going to take time for you to learn. You have to be willing to lose, you have to be willing to make some mistakes, but as you do that, you're going to see what's better for you. Maybe you're going to start investing your money and you're going to say, you know what, I don't like picking stocks. Maybe I'll invest in some ETFs, but I'm not going to really be involved with my investments. I'm just going to stick my 401k, my IRA, and my ETFs. Maybe you start investing your money yourself and you say, wow, I really can beat the returns of my 401k. I can get better tax breaks if I invest my money in myself, and I can create more cash flow. So then you find other ways to invest your money, and that's what you do with your money. You have to be more educated, and the way that you become more educated is by actually doing it. Me just telling you what to do might not apply to you because your goals are not mine, your education is not the same that I have, and the hustle and drive that you have is not going to be the same as me. So when it comes to money, it's not one size fits all. That's why I never say this is what you need to be doing with your money if you want to become wealthy. There are so many different ways, and you got to find the right thing for you. Some people will do it through the stock market. Some people will do it through real estate. Some people will do it through cryptocurrency. Some people will do it through their own business. You got to figure out what's right for you. And the only way you can figure that out is by trying and learning. You don't know what's going to be the best for you until you actually try it. But that means you have to be willing to take your first step. So if you're just starting off, start with your 401k, start with the IRA, then evolve to the next thing. Go open up a stock brokerage account. Start investing your money in some ETFs, some funds that give you exposure to the general stock market, some funds that give you exposure to different sectors that you like. Then start investing in different companies. Start researching different companies. This is where you're going to start to see if you like this process or not. If you like it, if you like researching companies, start doing more research, start learning more. You could also think about investing in real estate, physical real estate. The advantage with that is now you can start generating cash flow and you can get good tax breaks. The downfall with real estate is it takes more cash. You're going to need a lot more capital to go out and invest in real estate versus if you want to go and invest in a stock, you can start with as little as $100. But you need to create a system where every dollar that you earn has a job. The simplest way that you can do that is follow something like a 75-15-10 plan, which says for every dollar that you earn, 75 cents is the maximum that you can spend, 15 cents is the minimum that you're investing, and 10 cents is the minimum that you're saving. That way now, anytime you get paid, your dollar's gonna have a job. You know whether it can be spent, whether it should be invested, whether it should be saved. And then when it comes to your investment money, now you're gonna be trying different ways to build your wealth through your investments, because wealth is built through your investments. Your wealth is not gonna be built through your savings, and your wealth is not gonna be built through your job. Your wealth is going to be built through your investments. This is what every single wealthy person has learned through their time of trying to become wealthy. And so if you want to become wealthy, you got to do what the wealthy people do, and you have to understand how to invest your money. The only way you know what's going to be right for you is by actually doing it. This brings me to number 5. The 5th thing that you can do now is bring back the credit card. Once you know how to use your money the right way, this is when you can make the decision for yourself if you should be using credit cards or not. If you got stuck into the system of being in credit card debt, you might be scarred. You might say, I never want to use a credit card again. That's fine. If you're worried about going into credit card debt, it's not worth the rewards, the perks, or any of the other benefits that you get with the credit card. But now, if you have built that financial discipline, you know how to spend your money, you know you're not going to spend more money than you normally would if you would have just bought it with cash, you know that you're not going to overpay, you know that you're going to pay off your entire balance in full every single month and never carry a balance and never pay a penny in interest, now you can consider using a credit card to get the benefits and perks of a credit card, but you have to be honest with yourself. I love using a credit card, but I also know that I'm disciplined with my spending. I also know that I can use my credit card to my advantage. But if you cannot do that, do not use a credit card and start this system all over again where now you go into credit card debt because you cannot control your spending. You have to be honest with yourself. And that's the first step to really any sort of financial success is you have to be honest with yourself. Not everybody can be Kobe Bryant. Not everybody can be LeBron James. You have to know what you're good at and try to succeed in that instead of just trying to play the game that everybody else is playing. Just because somebody else is doing something, just because LeBron James is playing basketball and making a lot of money do that, does not mean that you got to go and play basketball. You got to figure out what's the right game for you and excel at that. If you enjoyed this video and you want to see how I use my credit cards, I made a video and you can watch it right over here on how to do that. And if you want to see how you can start generating passive income, I'll put together a free guide on how to start generating passive income, and you can download it by clicking that button below. Thank you for watching, and as always, keep hustling. I was just in Jamaica for a week and my credit card paid for my trip.